All right. With that, I have a couple minutes, so I'm going to open it up to some questions. And here they are. I had my question panel hid while I did that, but they have been coming in. So if you've got a couple questions, keep them general for the benefit of the whole group. But let's hop into some of these. Dan wants to know, why do you say this is a narrow window? Do you expect that the demand will go down next year when the eviction ban is lifted and owners can't pay their mortgages and will bring more inventory to the market? I think I wasn't getting at that, Dan. What I was getting at, I think it's a narrow window because I think construction costs are going up so much. And I think demand is so high. Interest rates are at all-time lows. So people who have money, people who didn't lose their job during COVID, this is just a great time for them to go upgrade their house, buy a new home, refinance that home. So I think just the cost of new construction is going to continue going up. And we know that when property values go up, rent to value ratios get compressed. So if I'm coming in as a leveraged buyer and I want to come in with a 20% down payment, I know that to have positive cash flow with a compressed rent to value ratio, that gets more challenging the higher the price gets. So that's really what I was getting at, is I think there's a narrow window for cash flow with new construction. Now, do I think that we're going to see some market impacts next year once this moratorium and mortgage forbearance protections are lifted? Possibly. I'm not anticipating personally a huge fallout, just because I know that we have record equity in homeownership right now. And we have a seller's market. So people who are in distress, they have an opportunity to sell their homes and get out from under that mortgage without having to go into foreclosure, without having to go into a short sale. So certainly, I think anytime unemployment is as high as it is, we're going to see some fallout, but I don't think that we're going to see what we saw last time. So yeah, that's my little extra 2 cents there. All right. Someone here is specifically interested in the single family homes. This is what it's meant to do, get you interested in this price point. If you are interested in purchasing one of these homes, I think you need to keep a pulse on new construction income property month. Definitely plan to join us at the live event on the 26th, where we're going to be featuring reserved properties from each of our teams, but they all have deals today. So if you are a member of RealWealth Network, which the fact that you're on this call means you already have access to all of the different teams. So log into your account, click on single family rentals, or click on the new construction, hover over the new construction tab, and you'll see a drop down window of all of the different teams that offer new construction homes. Select a market. You'll see the most updated webinar series that I recorded, or one of the other investment counselors recorded with that team, where you can get to know the market, you can see pictures of the interiors, you can see sample properties, get a lot more specific information, and then you'll see their contact information right under the How to Invest tab. So you don't have to wait until the live event on Saturday. You could call them today and get access to their inventory and get something under contract. All right, there's lots of specific questions here about markets and the counties that they're building in, or specific areas. Again, it's a little too granular than we wanted to get into in this webinar, but if you access the market page, we get into that kind of detail. And like I said, all month we've been updating every webinar with those teams, so you can go and get fresh content from them. Do any of these new construction homes come with cost segregation? Barclay, that is a possibility. Cost segregation is a tax strategy, and it is a benefit, and it is being done more commonly now on single family homes. Again, I'm not a CPA, so I don't want to get too in the weeds on that, but that is an option, and it is a potential benefit of new construction, being able to kind of accelerate your depreciation on the property. How do you resolve the requirement for a third-party inspection when the developer may not allow this? I have not encountered a builder or developer who is not allowing a home inspection. That would kind of have me scratch my head if they wouldn't allow a home inspection. I probably wouldn't buy a property that someone said I couldn't inspect. What I was saying is that sometimes they don't have an inspection contingency in the contract, meaning that if you found something at inspection contingency would say that if you found something in that inspection that was a deal breaker for you, that would be a viable reason for you to get out of that contract. And many builders are not willing to include an inspection contingency because they're willing to fix anything that inspection reveals. Okay, this is a good question. Do you have a portfolio of homes on infill locations instead of one here and there? Yes, some of our teams do have, a lot of inventory, so you can get multiple properties. You don't necessarily have to pick onesie twosies in really separate locations. Sometimes they do have several in, close proximity to the other. That's going to be market specific and would definitely require coordination directly with the property team. Okay. Don wants me to clarify where the master pro forma is on the website. Do not see it on the investor resources. Okay, so you have to be on the homepage. So go to realwealth.com. Make sure you're not on the investor portal, realwealth.com. And it's underneath I think it's under the invest tab at the very bottom right. If you can't find it, Don, I think you're one of my clients. Shoot me an email. I'll send you a link to it. And any of you who can't find it, send an email to your investment counselor and we'll get it sent to you. Questions here about lenders. Do you have any preferred lenders? Yes, we do. Log into the investor portal. So that's investor.realwealth.com. And you will see under resources there, we have a list of lenders. We've got traditional lenders, conventional lenders, non-conventional lenders, and non-recourse lenders. All of them there specialize in working with real estate investors. So that's a great place to start if you're looking for a lender. And all of them are licensed in just about all of the markets where we have property teams. So you can get yourself pre-approved and get your financing strategy all hammered out before you pick a market. All right. Do we have to get pre-approved before we talk to an advisor? No. So before you talk to your investment counselor, no, it's not necessary. We can definitely have a conversation with you prior to that. I would tell you that you should probably be pre-approved before you reach out to a property team. Because inventory is tight, they're wanting to deal, their time needs to be made available for people who are ready to buy, people who have an actionable plan. They can put a property under contract and move forward. So I would recommend before you reach out to the property team, you should probably have a financing plan in place, but certainly not a requirement to connect with your investment counselor. Do that sooner than later. Do we have preferred insurance providers? No, we don't specifically at RealWealth, but the property teams do. So it'll be market specific. So ask them if they can provide you or connect you with their preferred insurance provider. The quotes that they give or the numbers that they give on their pro formas for insurance are usually pulled from a insurance company that they use. So that those numbers are oftentimes pretty accurate based on a real quote. So ask who they got that quote from. So someone says, maybe demand is too high right now, but are the new construction prices as listed on the various sites negotiable? To that, I would say it's unlikely right now. I just don't think there's any reason for someone to discount property anywhere. Maybe the super high-end stuff. I hear there's some deals in New York City right now, but this affordable inventory, there's just no reason for anybody to discount prices. So generally speaking, yeah, the prices that you see, that's going to be the bottom price for that property. But certainly get an appraisal and do some due diligence to make sure that you're not overpaying for that property. All right, take a couple more here. Do builders ever give a break on price when requiring the 20% earnest money since it's a win-win for them? Likely depends on the demand at the time. Our money is tied up until closing. Peter, no, I have not seen this. And I understand that hesitation, like especially if you're buying a expensive quadplex, $400,000 or $500,000 home to put 10% down on a multifamily or 20% and then have construction take over a year, that can be not fun to have that money sitting. But again, I'll share kind of my personal experience. It can also work in your favor. I had to send a very large earnest money deposit for the quadplex that I'm under contract on. And fortunately, that got me out of the stock market at a great time. And I have been waiting for that property to be completed, and it's closing with a lot of instant equity. We got a valuation study done on the property, and we've got equity there. So I'm not as upset about having all that money kind of sitting on the sidelines, or so I thought. It was actually reserving that property for me such that I could get it at yesterday's price. So I understand that hesitation, Peter, but again, you got to kind of understand that mutual, the builder in my circumstance is leaving a lot more meat on the bone than he was planning to. So that worked out for me, but it could go the other way too. I certainly understand that. All right. I think that's about all we have time for. I'm sorry I'm not getting through all these. You guys are asking some great questions. Again, this is meant to be built upon. Continue to join us through the new construction income property month. We are going to continue to bring you guys good content. Like I mentioned, we've got some upcoming markets. Next week, we're talking to Atlanta, so be sure to tune in for that one. You should definitely plan to connect with your investment counselor. As I mentioned earlier, we've built a lot of new internal tools that are helping us keep all of these different markets and teams straight. So connect with your investment counselor to take advantage of all the time that we've dedicated to doing that. Connect with the RealWealth property teams. Once you kind of know, hey, I've checked out the content that you've got on the website, I've connected with my investment counselor, start exposing yourself to the property teams. Connect with them directly, get access to their inventory, maybe travel out to the market. And as I mentioned, we'd love to have you guys continue to join us through this new construction income property month. Quick plug for that virtual live event. Again, it's happening Saturday, September 26th. It's going to go from 1 to 4 p.m. Pacific time. We've got that member investor panel. We are going to take questions from the audience too. So if you're curious to hear from somebody who did this years ago and who's held those new construction homes for a period of time, be sure that you join us. We know you guys will get a lot out of that. And again, we're going to be featuring some exclusive deals that our teams are reserving just for you, for RealWealth members. All right, I hope this was beneficial for you guys. If you joined a little bit late, know that we have recorded this entire video and we are going to be posting it to the investor portal, usually by tomorrow. So you can find it under the recent webinars tab. All right, guys, thanks so much for joining. We'll see you next week. Bye-bye.